You hear the term trading psychology thrown around all the time, but what does it actually mean when you're inside a high stakes hedge fund? Well, you can forget the online gurus and all those motivational quotes. Today, we are diving into the real discipline that professionals use to manage uncertainty.
So let's just get this out of the way right now with a foundational truth from the professional world. Psychology is absolutely not bullshit. It's critical. But, and this is a huge but, the psychology that actually matters in institutional trading looks almost nothing like the stuff you see peddled online. See, on one side, you've got the whole social media narrative, right? Hodl to the moon, all these decisions driven by emotion. And on the other side, you have the cold, hard, process-driven reality of an institution. This gap is where most traders get wiped out. Okay, so let's tackle this huge misunderstanding head-on. Because to really get what institutional psychology is, we have to be super clear about what it is not. Yeah, this is the stuff you see everywhere. This is the typical retail psychology starter pack, working on your motivation, building your confidence, posting mindset quotes, and trying to manage the emotional roller coaster of a win or a loss. Inside a professional fund, all of this is just considered noise. It's totally irrelevant to the process.
And you can boil down the core difference to one simple question. The retail trader is always asking, how do I feel about this trade? But the institutional trader, they're asking, does this trade still fit our system? One is basically a search for an emotional gut check. The other is a check against a cold, objective process. So if we just toss that entire mindset playbook out the window, what's left? What takes its place? Well, professionals build their psychological edge on four very specific trainable disciplines.
So what are they? First, behavioral discipline, basically following your process. Second, surviving variance, which is just weathering the storms. Third, making decisions under uncertainty, acting when you don't have all the answers. And finally, number 4, ego suppression. And trust me, this is the hardest one of all, so let's dive into each one.
All right, first up, behavioral discipline. This is the bedrock, the foundation of everything. Forget confidence. This is about raw execution. It's about when the market is going crazy and every single instinct in your body is screaming, get out, sell. Do you have the discipline to stick to your predefined plan? That right there, that's process over panic.
Second, we've got surviving variance. In simple terms, this just means you have to accept that even your best ideas are going to lose money sometimes. That drawdown, that's just a temporary dip in your account. The real discipline here is having the stomach to tolerate that discomfort without bailing on a perfectly valid strategy.
And really think about this for a second. Most traders don't blow up because their ideas are bad. They fail because they just can't handle the psychological pressure of being in the red, even for a little while. It's the discomfort of uncertainty, not a flawed thesis, that washes most people right out of the market. Which, brings us perfectly to the third discipline, making decisions when things are uncertain. The pros know they will never have all the answers. The goal isn't to perfectly predict the future. The real skill is being able to act decisively based on probabilities, even when you have incomplete information. You see, the novice is on this endless hunt for certainty, always looking for that one perfect can't-miss signal. The professional has a completely different job. It's not to find certainty, it's to manage ambiguity. Their entire world exists in that gray area of probabilities.
And finally, we get to the fourth, and probably the most difficult discipline of all, ego suppression. This means you have to completely detach your own self-worth from your trading results. You are not your P&L. A winning trade doesn't make you a genius, and a losing trade definitely doesn't make you a failure.
Look, in a professional setting, the only thing that matters is your risk-adjusted return. That's it. The market does not care about your opinion. You can be right about where a stock is going and still lose a ton of money because of bad execution. And that's a failure. Or you can be totally wrong and still make money through smart risk management. That's a success. So how do you actually build these 4 disciplines? It's not by meditating or chanting affirmations in the mirror. Professionals get their psychological strength by engineering systems that make it almost impossible to make an emotional decision in the first place. And this right here is the fundamental flaw in almost all online trading psychology. It asks you to do the impossible, to just control these primal emotions like fear and greed when you're under extreme stress. It's a recipe for disaster because it relies on willpower, and willpower is always the first thing to snap under pressure.
So instead of relying on willpower, institutions build a machine. They don't try to control their emotions, they just implement hard risk rules that take the decision out of their hands. They don't fight fear and greed, they use systematic position sizing so that every trade size is determined by math, not a gut feeling. And they don't just believe in themselves, they build a robust portfolio. The system is the solution.
And all of this, it all leads to one single, incredibly important bottom line. If you only remember one thing from all of this, please make it this next point.
Here it is. If your process is weak, psychology will not save you. It doesn't matter if you're the most disciplined, emotionless trader on the planet. If your system is fundamentally broken, you are still going to lose money. Full stop.
But the reverse of that is also true. If your process is strong, if you've tested it and you know it has an edge, then the psychology part becomes incredibly simple. It's just execution. It's nothing more than the discipline to follow the plan that you made when you were calm and rational. That's it.
So let's just put a bow on this. The social media version of trading psychology, it's pretty much a useless distraction. The institutional version, it's absolutely critical. And it really just comes down to two things: sticking to your process and tolerating uncertainty. That's the whole game.
And that leaves all of us with one crucial question to ask ourselves. Take a hard look at your own approach. Are you spending your time working on your mindset, or are you spending that time building your system? Because as we've just seen, one of those paths leads to a whole lot of frustration, and the other leads to a professional process. The choice is yours.